Good morning, everybody, and welcome to the Morning Volatility Report. This is Andrew Giovinazzi from OptionPit.com, welcoming you to, well, a day of volatility. Let's just say that. How's everybody doing? Yeah, I know. Yesterday, how about the alert going out to take some profits in the SPXY position? Unbelievable movement this morning. Actually, it's not unbelievable. But anyway, we'll get to that in a second. Boot camp. If you want to understand how to manage trades, um, understanding, increasing your profitability of directional trading ideas, understanding how to sell premium with some risk management techniques, understanding Greeks, register for our boot camp. Okay, it starts September 30th. That's 12 days away. Okay, or 13 days away. No, 12 days away. Is this an additional cost? Robert, if you're a gold member, it is not. Gold and above gets all of our special events for free. And if you add up the cost of all the special events, it's far more than what gold costs. Right? So it's a great deal. Well, we try to make everybody happy. Isn't it nice that you get something more than what you paid for? Alrighty, and that will start at 13. Mark and I will both be doing that. More information will be coming out on it. Speaking of more than we paid for, let's get to, we're getting a muted move in gold. We are getting a move in the index that is priced, right? Yesterday we saw 18, I think 18 VIX traded for a brief period of time. Let's do the 5-day chart. Did. But he's like, okay. Let me pull up a little nicer one here. Okay. All right. Let's take a look here. And I thought this was, if I if I thought that we were going to do this today, I definitely would have closed a little bit more of the short vol. But it bounced parabolically up from there literally within 20 minutes. So unless you really had orders in, you weren't going to be able to close anything anyway. Now, as of right now, we're down 1.25%. All right. So that's 23 VIX, 24 vol, whatever. It's priced fair. We have had such dramatic down moves from here to here this week. From like 25, I think we hit a 20. That's a 5-point drop in VIX this week prior to the Fed. Now the Fed has said their thing, and I think we are in the realm of, and let's just take a look at what the futures are doing, right? You've got the OCC futures up 57 cents. That's not a lot. Okay. I would be a lot more worried as far as seeing more spin down in the market if I saw that future trading 22 and a half. Okay. If I saw the NOV trading in the 20s again, I would be more worried. So the long end of the curve, especially, everything's definitely moving down. Okay. So all the products, the short vol products, the inverse products are having a difficult day. But they seem to have kind of hit a level and stopped. If we keep going, I have no idea on that. All right. So I think we are, and part of what all the, kind of the volatility we've had is, and the Wall Street Journal might have hit it right. The central bankers have spent a lot of money, and the only thing they managed to do really is to pump up the equity markets, right? So most of our strategy has been to try to take profits, where we can. We've had some short vol positions and some long vol positions. And when the vol spikes, close the long vol. When it comes back in, you start to close the short vol. And for a while, it certainly looked like the way the volatility was moving this week that after the Fed, and we saw that for a brief moment. So if you had orders in, you did really well. Closed a lot of short volatility. And now we're back to this level. So we'll see if, first off, the sell-off has to, one, maintain and sustain, keep going down. So keep an eye on, real easy, keep an eye on this October future. If people start to get a little worried again, that's going to start to tick up. You know, if it's up by like a buck, buck and a quarter, something like that, and our curve starts to get a lot more backwards, feel free to get a lot more worried. But as far as our early short vol, we hit all the target prices pretty much yesterday, very close to it at one point. So this is where we sit. Okay. This is really never good for, as Mark says, it's really never good for the S&P 500. When the front end of the curve is backward all the way to the back. Okay. If we start to get down and get a little bit more into contango, we're just going to have these swings, and any drop in vol like we saw 18. I even thought 16 was a possibility later next week. And it's what's funny as it sounds, it's still not out of the realm of possibility. Now, that sounds crazy, but just as volatile as we were earlier in the week and it went away, it certainly can happen again. So earnings are going to start to come out in October. We do have some more fiscal cliff and more budget nonsense. But other than that, there is no big news anymore. I think we've now though reached pretty much, let's just call it the end of what monetary policy can do for equities. And I think that's what we're stuck with right now, right? Which might make us a lot more volatile. But as of right now, all the vol products are just off of their highs. I'm looking at UVXY was trading like 51, almost 52. VXX was trading over 24. So they're kind of hanging out. And we're also not seeing, again, keep an eye on vol. Okay, it's still high, but it's not as high as it was. We're getting definitely a little uptick today from yesterday to today, right, toward the end. But, you know, we're not up here yet. Right? The key thing is the vol has to hold up. Okay? If the vol can't hold up, then we probably will start to see things, you know, rationalize some way. Okay? And Mark's got some ideas, single stock ideas. All right. Alrighty, anyway, so I will see all of you in the chat here in a few minutes. And we will be back. I sent some notes out in the strategy letter. This morning we should look at starting to price maybe and close our VIX butterfly. Let's see how it's doing. I think it's a little life sprung back into it. All right, everybody, have a good day.